Good afternoon. My name is Bernard Kotanko. I'm a senior partner with McKinsey, and on behalf of all the McKinsey team, it's a great pleasure to share with you our perspectives on the insurance agenda for 2024. We gave it the title Global Insurance at the Crossroads because we do see a whole set of challenges coming into the industry and a big agenda which we'd like to go through together with you. We will start with a brief view on the macro context led by Kweli Ellingrud, who leads McKinsey Global Institute. Then our managing partner for North America will talk about the insurance agenda in that region. I'll talk about Asia Pacific, and then our colleague Ari Libariakan will talk about innovation because that is the key driving force. We hope you find it exciting and interesting and look forward to continuing the debate in the IAS. With that, let me pass on to talk about the macro context.
Thank you, Bernhard. I want to take us back and look broadly at the global macroeconomic context around us that is shaping insurance, but also other industries in our day-to-day life. Let's jump in. Many of you have probably felt these last few years have felt like an acceleration of change. Things are moving more quickly all around us. Decisions need to be made more quickly. It feels like a cluster of earthquakes in that broader macro context around us. And to look at whether right now is one of those seismic shifts, I want to take us back to decades ago. What we find is that every couple decades, every 20 or 30 years, there are these cluster of earthquakes that completely shift the macroeconomic context around us. And we believe that we're currently in the middle of one of those shifts today. To explore whether we are, let me take you back just after World War II. In that era, we call it the post-war boom, right after World War II, so 1944 to 1946, there was a similar cluster of earthquakes, changes in our world around us. We had the foundation of the United Nations, IMF, World Bank, lots of global multilateral institutions coming into existence. We had a number of currencies pegged to the US dollars. We had the atomic age. We had, of course, the end of World War II and lots of shifts there. With that, we had an entire golden age of engineering starting, as well as a petroleum boom with about 9 times as much oil and gas available as previously. And we also had the rebuilding of Europe starting with the Marshall Plan and other elements. We also had exploding population. So the median age globally dropped down to about 20. Much lower than it ever had before, with a huge baby boom around the world. That was the cluster of earthquakes in that post-war boom. Then I want to fast forward us a couple of decades to the next era. And this we call the era of contention. It's in the early 1970s, specifically 1971 to 1973. So over the course of a couple of years, a lot of kind of seismic events are coming together. Japan, for the first time, surpasses Germany in terms of GDP. We have the end of the gold standard. We have a lot of global conflict between the former USSR and the United States. The US withdraws from Vietnam. We have an oil crisis. So for the first time, we no longer have oil abundantly everywhere. The cost of oil goes up significantly. And we have an inflationary recession. In fact, this early 1970s looks, at least in the United States and in many countries around the world, very much like it does today. We have the rise of consumer electronics. In most homes, you not only now have a car as you did before, but a lot of sound systems, dishwashers, microwaves, all of these things in many homes around the world, particularly in more developed countries. At this similar time, we have fertility dropping. So while there was a few decades of a baby boom and falling median ages across the world, we now have lower fertility, fewer kids per family, and a life expectancy increase. So the beginning of an aging population around the world. We also have in this phase China entering top-tier growth, double-digit growth. And over the next few decades, China will bring 700, 800 million households out of poverty into that middle class. That is that era of markets. Then another 20 or so years forward, just shy of that, we have the next era, and this is the era of markets. Global trade, a global world, very much of a new world order in those kind of early 90s. We have the fall of the Berlin Wall, the Gulf War, the World Wide Web starts to expand exponentially, feels very much like the times of generative AI in these days. The USSR is no longer in the same form. We also have the return of fossil fuels being much more abundant and the rise of more urbanized families in developed worlds and smaller families as well. And we have the massive financialization of the global economy. And so that period was the last time when a new world order, a new global context really emerged. That then brings us to today, right? A few decades later, 30 years later, where do we find ourselves? And across those same 5 dimensions that we've looked at across each of these eras, world order, technology, demographics, resources, and capitalization, we find that we have shifted pretty dramatically from that last world order to where we are today. And if you shift to the next page, we're looking ahead at this next era. What will this next era bring in terms of those 5 same dimensions? On the world order, we think we are shifting now not to a unipolar world, but a very much a multipolar world with lots of global connections, but also geopolitics playing a greater role. On technology, I think we've all felt the acceleration of generative AI, bringing to light the true promise of AI more broadly, but also a lot more broad use of generative AI and how we can capture those improvements, not just in productivity, but also in growth, in consistency, risk deliverables as well. On demographics, we have a global aging problem across most of the developed world, as we have higher dependency ratios, more people who've retired and are no longer working, as well as younger folks, supported by a shrinking set of working age population. On resources, we are faced with renewables and how do we make this transition to sustainable energy. And on capitalization, we have outgrowing debt that has been a challenge globally and to many economies. And so our argument is in this moment that feels like a lot of change, there is in fact this cluster of earthquakes that is shifting us from the past era to a new era. And what will that era look like? On the next page, I want to show a little bit about what are insurers doing in this broader global context. What are the moves that insurers are making to position themselves well, however this next era unfolds? And through our research, there are 5 key moves that insurers have made. Not all successful insurers do all 5 of these moves, but typically they pick 2 or 3 and they really double down on them. And that puts them in a great position strategically to navigate this next era. First, successful insurers are dynamically shifting resources and capital between businesses. I think the challenge here is how do you do so significantly and at scale, right? Not your budget is last year's budget plus or minus 5%, but really shifting investments, not just your capital and investments, but also your people and your talent to the businesses that are growing and going to shape the way for the next 5 to 10 years. Another action that insurers are taking is reinvesting their capital in organic growth, right? At almost 2 times, 1.7 times their competitors. And how do you do that systematically, but with purpose? Back connected to action number 1, makes a significant difference in performance. The third theme, not all insurers are pursuing this, but those that do pursue M&A and do so systematically, thematically, and where they are capturing and acquiring either one or a set of businesses that are about 30% of their overall market cap. It's not the huge deals that make the headlines. It's not little deals because they aren't big enough to make a difference. It's a bit of that Goldilocks, perfect in the middle around that 30% market cap place. Fourth, in the core of the business, enhancing underwriting margins, right? The core of what insurers do best or should be doing better than their peers. Those that are expanding and improving their underwriting margin and doing so with greater typically data precision linked to their strategy are doing much better than others. And finally, the 5th action would be making game-changing and sustainable improvements in productivity, right? Those that are improving their expense ratios, and in fact, taking part of that to reinvest in generative AI or digital self-serve, for example. Those are the insurers that are strategically putting themselves in the best position to succeed in this next era. So those are the 5. As I said, not all carriers, you simply can't do all 5 of them, but picking your spots in 2, max 3 of them makes a real strategic difference. Fritz, over to you.
Thank you, Quaylen. Appreciate the macro context. And if we maybe zoom in from that overall context into the Americas, let's start by looking at the returns over the last decade, really across life, property casualty, and overall. And what you see here in the top row is that the returns, total returns, were highest coming out of the financial crisis in 2013 there. And since then, in what was obviously a low, very low interest rate environment with some volatile market returns and also an increase in overall property casualty catastrophe events, you see those returns kind of bouncing around. And then in the post-COVID era here, in those last few years, settling at a level that's not quite at the 10% rate there for overall, and with forward expectations at that 8.6% after-tax return on equity. And you see that both in life with the 2020 being an aberration, but overall hovering there around 9 or 10%. And property casualty, where it's been more impacted the last few years with catastrophes, with inflation, and so on. If we turn to the next page here, one of the elements that Quaylen talked about was productivity. Given the demographic shifts and the longevity, but lack of growth and somewhat high penetration, productivity is obviously an increasingly important lever for all insurers. What you can see here is costs over the last cost efficiency over the last 2 decades by industry, and you see life insurance at the top, where operating costs have increased 20%, and much of this has been investment in technology that has not always yielded the productivity results that were anticipated. You can see the property casualty industry has done a bit better, but not at the level of the automotive or telecommunications industries, which are down 30% or more, albeit starting from a different starting point. If we look at the next page here, and this is a deep dive on property and casualty carriers, and we look at a 5-year period here from 2014 to 18, and just say what percentage of them, and you see the Americas row on the bottom, have reduced their expense ratio by more than 3 points, or from 1 to 3 points, and that's over a third. But then you see on the other side, 19% have increased their expense ratio by 1 to 3 points, and 23% by greater than 3. So net, this gets you to the roughly holding your own on cost and productivity. And so this focus in a challenging growth environment is going to be important. And so when we look at trends in 2024 and the evolution, I'll touch on a few of these. I think clearly organic growth challenges when we look at the overall share of insurance premiums as part of GDP, that's been declining. Similarly, the household penetration for life insurance has been declining in the U.S. And how do you reverse those penetration points? Customer needs are evolving given longevity on the life and retirement side, as well as different needs in terms of coverage in a rapidly changing catastrophe environment in property casualty. We talked about productivity. I'll talk about private capital there, where private equity firms and mutuals have dramatically increased their share, especially in life and retirement. And it's, with acquisitions, be it Brookfield's announced acquisition of American Equity, obviously Athene Apollo, but overall increasing share there in the annuities space, as well as value shifting, continuing to shift to brokers. And then on technology, I mentioned it earlier in terms of importance for productivity. There has been a rapid adoption of early generative AI, which has increased actually traditional AI usage as well, which has some green shoots for productivity enhancements in the industry, subject to all the foundational elements like data and so on. And lastly, obviously, the regulatory changes in our industry continue to require enhancements, new ways of reporting, measuring, ensuring capital, and so on. So as we look ahead to 2024, these are some of the trends we're seeing impacting the actions that insurers are taking. Bernhard, over to you.
Fritz talked a lot about productivity, and Asia, especially Asia ex-Japan, has always been the growth hotbed. But what we do see is that this strong premium growth has slowed down in recent years, and we expect further slowdown in growth. And that really changes the strategic dynamic for insurers in Asia Pacific, and that is true on the life side as well as on the P&C side. So we are seeing an industry that is growing at slower pace. What this comes also with is a challenge on the productivity side, because for many years, Asia was just focused on growth, and that drove valuation. But what we now see is that these valuations are converging between Asia and the global average. You see here the price to book ratios, and that margin has really shrunk. And that is on the one hand, of course, driven by macroeconomic conditions, as Kwai Lin pointed out, a lot of capital leaving, especially Greater China. But it's also because of the slowdown in growth combined with challenges on productivity. And that productivity, you know, Fritz showed the curve for North America. When we look at the curve of administrative cost versus GWP development here in just the mature Asian markets, we really see the challenge. And therefore, productivity has to come up top of the agenda for insurers, especially in developed Asian markets. But even in still more emerging growth markets, I think the patience is a little bit slowing down to say we accept the high cost overruns in those emerging businesses. So productivity critical because growth is slowing down and there is a pressure on valuations. Investors expect more bottom line to come out of Asia. The other big theme is distribution. Distribution in Asia is still predominantly quite a traditional agency model with large capacity. Of course, there are many professionalization efforts, but it's predominantly bancassurance and these big agencies. What we see for the future is that really this distribution model must be reimagined. And what we see here is how broad do you want to be in your product offering, and how do you use technology in a digital hybrid model? And you see here under 1, 2, 3, 4, 5, different, much more nimble choices of distribution models that will embark in the years to come. And 2024 will be a critical year for insurers to set the strategies, to set the design for what are the mix of distribution models and how do you want to evolve the current capacity-driven model. Another big theme for Asia is health. Many insurers are grappling with how to tap into this big pool of health where we see high out-of-pocket expense, relatively low level of social security systems. But the question is, how do you really do it? And insurers will need to decide between 3 broad archetypes. Do you just want to be a life insurer with health riders? Do you really have dedicated health products, especially also indemnity, which is in many markets still new? Or archetype 3 that you see here, do you really create an integrated health and wellness business where you're not just a payer, but you're also steering increasingly what kind of provision you do and how you connect that provision and services with the payment to also optimize health and well-being outcomes and also the economics across the health value chain. So that would be a big strategic choice, and we expect 2024 a year where many companies will need to come to the conclusion of what to do and how to really prove the model. Then retirement. Asia is aging, and a lot of the current systems are not prepared. You see it here in the net replacement ratio. A lot of the systems are not ready to really fund retirement. And while savings ratio in most Asian markets is high, the allocation is not yet there to really provide that kind of long-term funding. So for 2024 on the agenda is, how do you really create a retirement market? And this is a question to regulators, but it's especially a question to insurers. How do you build the capabilities to manage long-term liabilities, to manage longevity risk, to also serve customers in an age band that you normally don't serve to? And that will bring tremendous change, will bring new businesses that really focus on that retirement market across Asia. Then lastly, a word on P&C. What we do see is P&C in Asia, especially in the more emerging markets, is a small part of the sector. And we see a tale of two sides. On the one hand is a lot of new opportunities, specifically with electric vehicles, which require a whole new set of capabilities to insure properly. Cyber, which is a completely new market, hardly insured at all, and climate. On the other hand, of course, optimizing the core stays an absolute priority. And that is true for how you really plug insurance into a wider ecosystems, which are very important in Asia. How do you better penetrate the SME market? And then also, how do you generally upgrade your technical skills and expertise? So that will be the challenges on the P&C side, which again in Asia is still more nascent, especially in the emerging markets of Asia. With that, let us come to Europe. Europe, again, of course, a very large, very mature part of the global insurance industry. And similar to North America and Asia, let's first look at the growth situation. And growth has been, let's say, moderate. We expect a growth that is roughly in line with GDP, probably a little bit below. And that means that the insurance gaps are still not closed, especially the gaps when it comes to climate on the P&C side, when it comes to cyber on the P&C side, as well as on the life side, retirement and health. Profitability, again, remaining at roughly that level. Again, a relatively similar mix between life and P&C. When we look at the agenda for European insurers, you know, there's a glass half full and a glass half empty view. Let's start as risk managers with the glass half empty view. What we do see is for 2024, the challenge needs to be overcome of slow digital adoption. And we will talk later about innovation. We really see many insurers still lagging, and that is critical. You heard us talk about productivity, and the second big challenge is still high claims and operating costs. We see this continuing. Thirdly, we see in the risk value chain the question between primary insurers and reinsurers and what is actually the right risk transfer, especially in commercial. Insurtechs, we saw a big drop in valuations, of course, a big drop in investments. But what is the realistic path forward to get the maximum out of Insurtech? Then IFRS 17, of course, will bring a lot of disruption. And finally, talent in Europe is a challenge. It is an aging labor market, and we need critical capabilities for the insurance sector. So all this is more on the challenging side, and insurers need to raise up to the bar of these challenges to really respond. But then there is a ton of opportunities. Opportunity one, I mentioned it, large insurance opportunity, insurance gaps that still can be developed. Secondly, we do see an opportunity for increasing industry consolidation. The European insurance markets are much more fragmented than other regions, and there is more M&A activity to come. Finally, we see an opportunity to innovate on the product side with technical excellence, and we really can see Gen AI as a game changer, or as we call it here, the white knight that could drive productivity as well as better customer experience. And lastly, we feel there is still a big opportunity for insurers to expand their partnerships and embed themselves more in wider ecosystems to untap new sources of growth. So that is the agenda in a glass half full view and in a glass half empty view. Now, what does this mean if you drive an insurance agenda for Europe? We really see 5 pillars of holistic impact and 3 enablers. The 5 pillars: Europe is on the forefront of ESG. Insurers need to be on the forefront of ESG to create business from it. Second, we talked about technical excellence. Claims, absolutely a must. Third, productivity and cost. You saw the curves for the regions. there is a challenge to really expand margin to be more efficient. On sales, the fourth pillar, very critical to really innovate and reimagine how you can plug yourself into ecosystems, how you create new offerings, and how you also use digital and Gen AI to foster your customer engagement. And that leads to the fifth pillar, which is new business building. It needs a muscle to really build new businesses and complement the traditional insurance companies with a new source of energy and growth. And then there are three enablers to really foster these new growth levers. The first one, analytics everywhere. Second, technology infrastructure. And then thirdly, MT stands for really a proper transformation skill. There needs to be more muscle for innovating and transforming. And with that, let's talk more about how to innovate and how to transform. And I'll hand it over to my colleague, Ari.
Hello. We're going to talk a bit about innovation as a key lever for growth. This actually applies across industries, but certainly in the insurance industry, which has a very mature business model steeped in decades and decades, and in some cases, centuries of data. If we flip ahead, we've done some research that shows that despite the uncertainty in the macroeconomic environment in the last 12 to 24 months, there's still about half of CEOs who are prioritizing innovation and new business building as a top 3 priority. This is different from the global financial crisis of 15 years ago, where there was a much more of a pullback and focus on near-term resilience and cash. Nowadays, companies are focused, especially in this industry, on near-term resilience, but also medium-term, looking around the corner and what do we need to build and innovate to create value in the future. We're seeing that also in terms of the number of companies that have large tech transformations underway. About 90% of companies across industries have some form of a pretty fundamental digital or technology transformation. Not all of them are delivering the value that executives want, but the ambition is there and the goal is there. So the real question is, how do you innovate and how do you transform digitally in a way that scales value? As we look at it, we compared the insurance industry to other industries in terms of digital maturity. We have a digital quotient that evaluated industries. And we found that actually insurance is around the middle across industries and well below digital leaders, which represents to us a big upside opportunity in terms of investing in digital and AI capabilities, linking it to use cases and creating value through technology for the insurance industry. We see this across industries. We see this across property, casualty, and life insurance. We see it in B2C or B2B or B2B2C. Inevitably, there's a big upside in value from digital transformation and digital maturity in this industry. So now we talk about how do we do that? And if we go to the next page, we've done research on over 1,000 companies looking at which ones are most successfully rewiring themselves to innovate, leveraging digital transformation. And the formula that's common across the 20% or so that are successful is what you see here. The first is having a clear strategic roadmap. What are the value-creating business opportunities that fit within the CEO and the management team and the board agenda? Starting there, and that gives you the roadmap, and working backwards from there into what are the digital and AI opportunities that enable that? Maybe it's transforming claims through technology. Maybe it's enabling underwriters in particular lines to leverage data more, bring more insights to what they're doing. Maybe it's in the back office and bringing much more generative AI. What are those opportunities? Maybe it's building brand new digital businesses and ecosystems that can create new sources of revenue. Starting with the roadmap, then you get into the capabilities. Talent, what's the talent you need? I think most insurers believe the composition of talent they need in a few years' time will look different from what it does today. Next, agile operating model, increasing the metabolic rate of insurance companies to make decisions faster, test and learn more, and pivot more quickly. So if you're working on something, it's not working, how do you learn from that and pivot and go in a different direction and keep doing that until you find the right path? Next, technology. How do you expose technology to the business better and make it easier for your teams to innovate. Next is data. Insurance is an industry that is steeped in data. How do you get the data in a usable format, location, so that you can apply basic analytics and advanced analytics and a lot of the AI and generative AI we've seen to improve customer experience, to improve performance across the value chain. And then finally, maybe most important is what's at the bottom here is change management, adoption and scaling. How do you do this in a way where human beings who work at the insurance company, as well as potentially distributors on the outside, start to use these digital capabilities and tools, which then turns into value creation. And without that, you'll be stuck with a bunch of great technology, but not much impact. So how do you then deliver on that last mile? So this is the formula we see. A few core beliefs that I'll end with here that CEOs and management teams have learned and are learning. The first is have a bold future vision. It is rare that a strategy that is modest and looks like what you're doing today is successful and takes you to the promised land over a 5 to 10 year period. What are the bold step outs? What are the businesses you're going to build? What are the innovations you're going to drive? How do you leverage cutting edge technologies to do things fundamentally differently? 2 is rewire the operating model to get innovation right. How do you work in a very different way? What are the daily processes? What are the cross-functional teams? What's the talent that you need? The third is linking innovation agenda to OKRs. Innovation ideas without OKRs are just great concepts that might inspire people in the near term. Linking them to OKRs is what will sustain the innovation agenda, because now you're measuring and tracking and reporting on quantitative metrics that will help you link to business value. And ultimately, that's what the insurance company is trying to do, is to create real value for customers, for employees, for stakeholders and shareholders, creating value. How do you measure that and how do you report on that? Fourth, build a strong bench of digital talent. This is not about hiring a completely new team from the outside. It's also not about upskilling your team only. It's probably a combination of both. How do you pivot your team over time to be much more digitally savvy, to be able to think about, launch, and implement these things to capture value? And then finally, accountability and board level insight. Tech-driven innovation is a fundamental enterprise level initiative. It is not to be delegated to any one executive. It is everyone's initiative. And so with that, you need to create the right accountability at every level, and you need board level oversight. Because if this is to be successful, it's going to fundamentally transform the whole insurance company. Customers will see that, employees will see that, but it needs to have the right accountability anchored at the right level. With that, I conclude the section here.
Thank you, Ari. Over the past half an hour, you heard a long story from the macro context, then regional perspectives from North America, Asia Pacific, Europe, and then we really zoomed into innovation because it is so important for the agenda in 2024. What are really the closing messages? The first one, yes, there is a lot of macro uncertainty. Quailin spoke about it, the longer historic context and what are some of the patterns we see. But as with any such disruptions, there are multiple opportunities for insurance. Insurance is needed to really protect our lives, protect our assets, and there are massive needs out there. Second message, in order to really untap that potential, innovation is the key enabler, and you heard Ari talk about it. Insurance is, as he said, somewhere in the middle ground, and it needs a step up, and you heard the recipes of how to rewire for success. You heard the regions and countries, the quest for productivity, which spans across all 3 regions, the unlocks around being more customer-oriented, pushing really a reimagination of distribution, and mobilizing new areas for insurance like cyber, longevity or retirement, and health. And finally, what we see is an increasing divergence between winners and laggards. And with that, I'll pass it on to you as the leaders in this sector, because your actions in 2024 will decide how you can be on the winning side. Thank you very much.